I think that Wall Street's full undivided attention now is on Bitcoin. And really, there's three things that drove this move. The first is that there's been record inflows into the ETFs. So last Thursday, 1.2 billion, second highest day. Those ETFs now collectively have over 140 billion. BlackRock's fund is now almost $90 billion in about a year. They went from not having a Bitcoin ETF to now they have a top 20 largest ETF in the world. So there's a lot of inflows there. Second thing is the options expired at the end of Q2. And so all that downward pressure on Bitcoin obviously goes away. That helps kind of like a beach ball getting put underneath the water, right? Obviously it can pop back up. And then the third thing is that there was a lot of short sellers. Well, the reason why I call it the greatest show on Wall Street is everyone wants Bitcoin. Like, this is no longer a contrarian trade. This is a consensus trade now.
Bitcoin is commanding Wall Street's full attention like never before, with its price climbing steadily past $123,000 and trading volumes reaching new heights. This surge is driven by several key factors, starting with record inflows into Bitcoin exchange-traded funds, ETFs. Last Thursday, these ETFs saw $1.2 billion in inflows, the second highest single-day amount ever recorded. Collectively, Bitcoin ETFs now manage over $140 billion in assets, signaling massive institutional interest. BlackRock's Bitcoin ETF has been a standout, growing to nearly $90 billion in about a year and becoming one of the world's top 20 largest ETFs. This rapid growth shows that Bitcoin is no longer a niche or contrarian investment. It has become a consensus trade embraced by many investors. Another important factor behind Bitcoin's price momentum is the expiration of options contracts at the end of the second quarter. This event removed much of the downward pressure that had been holding back the price, allowing Bitcoin to rebound strongly and continue its upward trajectory. The combination of heavy ETF inflows and easing market pressures has created an environment where persistent, price-insensitive buyers are driving the market higher. This has pushed Bitcoin into a true price discovery phase, with new all-time highs being tested and broken. In a recent interview with CNBC TV, Anthony Pompliano highlighted these developments, emphasizing that Bitcoin's rise is fueled by widespread demand from institutional investors, retail buyers, and major financial players alike. He described this moment as the greatest show on Wall Street, where Bitcoin has shifted from a speculative asset to a mainstream investment that commands the attention of the entire financial world. Before we continue, please support us by smashing the like and subscribe buttons. Remember to turn on your notification bell so you don't miss out on our latest content. Thanks for joining us again. Now, let's get back to the video.
Well, the reason why I call it the greatest show on Wall Street is everyone wants Bitcoin. Like, this is no longer a contrarian trade. This is a consensus trade now. And so you have the ETFs, you have the Bitcoin treasury companies, you have retail, you have sovereign wealth fund. Everybody wants Bitcoin.
Should we be scared of that? Meaning, we were talking about just economists and analysts. We're like, when the economists have a consensus view, you usually should go the other direction.
Yeah, well, the economists still don't like Bitcoin, so I think we're okay. But if you take a look at, the S&P, everyone wants the S&P, right? And so what you want is persistent kind of price-insensitive buyers. And that's finally what Bitcoin has. And it's not just coming from retail investors, it's also coming from these institutions. And I think that'll continue to drive the price.
Does it matter what Congress does anymore?
I think that Bitcoin has always been a decentralized asset that really didn't care what anyone else did. I think that the bill will pass, but again, the bills, most of the bills are actually not addressing Bitcoin in particular.
Right.
Stable coins, market structure, things like that.
General crypto universe, though.
Yeah, look, obviously having an administration that created the Strategic Bitcoin Reserve, leaned into Bitcoin, I think is a very bullish element, but I don't think that Bitcoin was going to go down or not work if the administration wasn't positive on it.
Wall Street's focus has shifted almost entirely to Bitcoin, and the recent surge in price is being driven by a combination of factors. There have been record-breaking inflows into Bitcoin ETFs, with $1.2 billion entering in a single day, which is the second highest on record. These ETFs now hold over $140 billion, and BlackRock's fund alone has grown to an astonishing $90 billion within just a year, making it one of the world's top 20 largest ETFs. This massive influx of money has brought a lot of new attention and liquidity to the market, fueling the rally. Anthony Pompliano explained that another important factor is the expiration of options at the end of the second quarter. When these options expired, the downward pressure on Bitcoin's price was lifted, allowing it to rebound quickly. He compared this to a beach ball being held underwater and then suddenly released. Short sellers have also played a role. As Bitcoin's price started to rise, many who were betting against it were forced to buy back in, which pushed the price even higher and triggered a phase known as price discovery. Looking back to last November, Bitcoin jumped from $70,000 to $90,000 in just a few weeks after breaking a new all-time high. Now, after breaking through the $110,000 range, the market has entered a similar price discovery phase. Pompliano said that while it's uncertain if Bitcoin will reach $140,000 immediately, the current environment is primed for another significant move, as traders and investors try to determine the new price ceiling.
But I just think that there is so much momentum around this that it becomes a situation where there's more pain rather than anything if you don't support this. Like, it is very obvious. I tweeted right before I came on. Warren Buffett is sitting on 5% of the treasury market. Boomers are buying up bonds. Young people are gobbling up as much Bitcoin as possible. What do you think young people care about? They don't care what happens in the bond market nearly as much as they care about what happens in the Bitcoin market. And so I think that politicians are not stupid. They understand that the future constituency that they have cares about this sector, and they're going to lean it. Well, I think that there's different people in the market. Now, the hardcore Bitcoiners, right, and I fully believe in self-custody. You should have the right to, and you should learn how to actually take control of those coins, be able to move them, hold them, secure them, et cetera. And so self-custody is a key part of Bitcoin and the value proposition to the world. At the same time, we live in a real financial regulated world where there's a lot of investors and LPs that are not going to let a fund manager or a public company have, a CEO who's walking around with the private keys. And so there are going to be these qualified custodians, third parties that people use. And so it goes back to, what are you optimizing for and what are the limitations placed on you?
Bitcoin is no longer a fringe bet. It's the epicenter of a financial revolution sweeping through Wall Street. Demand is coming in from all directions. Retail investors, corporate treasuries, ETFs, and even sovereign wealth funds. What used to be a contrarian move is now a full-blown consensus trade. And the most striking part? Buyers are stepping in regardless of price. They're not flinching, they just want exposure. Institutions are no longer sitting on the sidelines. They've entered the market in force, and many of them are buying in ways that are largely price insensitive. These aren't speculative retail trades. These are long-term strategic allocations from asset managers, pension funds, and endowments. Their steady presence is giving Bitcoin a floor and pushing it into a new phase of adoption. Despite rumblings around crypto regulations, Bitcoin's unique position as a decentralized asset gives it a form of immunity. Most regulatory attention is focused on stablecoins and centralized platforms. Bitcoin, by design, stands apart. And in this evolving regulatory landscape, that's proving to be a major strength.
What are all these moves signaling for the crypto space, but also what do they signal for the broader market? Steve, you've been on this bandwagon for a long time now.
Yeah, so obviously this is the most crypto-friendly administration and it's in its infancy. If you look at it, if you pull it back a little bit, so we have the Genius Act, we have the Clarity Act. If you look at the old SEC, they ran through enforcement versus regulatory. This one's running through regulatory clarity versus enforcement. Mm-hmm. And I don't want to say anything is possible or anything is going to be allowed. But if you have it gauged as a commodity versus a security, it does open up a lot of possibilities for you. So when you look at the estimates on price, there are people who think this goes to 200,000 this year. We only have a handful of months.
Are you?
I am a firm believer that it's going much, much higher from here. Think about corporate adoption. Corporate adoption is probably only about 2%. Central banks, only about 3%. Those are both going higher, much higher. Retail investors going much higher. So look at it through, I'll leave off with this. Look at it through the market cap of Bitcoin. That's around 2 trillion, let's say. Look at the market cap of gold. That's around 20 trillion. Maybe it doesn't have to be gold, but if it closes the gap to 50%, you're looking at $500,000 per Bitcoin. And I do think that in iShot, you're looking at 250, 350,000 pretty easily for crypto. There's a couple of things, a couple of hurdles, but I think those days of it losing 80% of its value and then rallying up are long gone. There's too many people that are looking for the asset.
Gold's around $20 trillion. I think Bitcoin itself maybe close to 3-ish. So, even half of that, again, you can do the math. Bitcoin goes from 120 to maybe 360, 400. So there are people out there that believe that for a long time, and seemingly it's playing out right before our eyes. I think one of the other factors, and Karen mentioned undisciplined. I think this rhetoric around Jerome Powell, or this renewed rhetoric about getting him out, having him resign, whatever it is, firing him. I think Kevin Hassett was on the show this morning talking about the president can fire the Fed chief, the Fed chair. That is true, but it's only for cause. But, seemingly everything is cause in today's world. So I think part of this rally is predicated on that as well.
Bitcoin has smashed through its all-time high like a rocket on afterburners. And this time, it doesn't flinch. It's not meme-fueled chaos or Reddit-fueled rebellion. No, this is institutional FOMO in its purest form. Hedge funds, ETFs, sovereign wealth funds, they're piling in like Bitcoin is the last golden ticket in a collapsing fiat circus. Price tags? Irrelevant. They're buying like tomorrow doesn't exist. Wall Street's old guard, once smug, now stunned, used to dismiss Bitcoin as internet voodoo. Today, they're watching it devour the returns of their cherished bond portfolios. And here's the twist. This wave isn't being driven by the usual suspects in retail. The big boys have taken the wheel, and they're driving straight through the gates of the traditional financial system. Meanwhile in Washington, Crypto Week looms. Politicians are scrambling to catch up, attempting to decode Bitcoin while quietly realizing they're already behind. Regulation is coming, yes. But Bitcoin, with its decentralized heartbeat, dances to no one's tune. It's the honey badger of finance. It doesn't flinch, fold, or wait for permission. Factor in a weakening dollar, dovish Fed murmurs, and inflation uncertainty, and what you get is the perfect storm for a digital asset breakout. But this isn't some hyped-up casino. Leverage is low. Futures markets are cool and composed. The capital inflows? Real, steady, and monstrous. And at the core of this movement is a generational shift. Boomers cling to bonds. Millennials and Gen Z? They're stacking sats. Bitcoin isn't just an asset. It's a statement. A declaration of financial independence in an age of surveillance and inflation. Even how people hold Bitcoin is evolving. Some demand self-custody, cold wallets, and sovereign control. Others, especially institutions, rely on regulated custodians. Both routes are valid. Both reflect the same truth. Bitcoin is no longer fringe. It's flexible, growing, and unapologetically complex. Welcome to the next chapter. This isn't just a market rally. It's a global reprogramming of how we define value, trust, and money itself. Meanwhile, Michael Saylor announced that Strategy has acquired 4,225 Bitcoin for approximately $472.5 million, with an average purchase price of about $111,827 per Bitcoin. According to him, the company's Bitcoin yield for 2025 so far stands at 20.2%. He also shared that, as of July 13, 2025, Strategy holds a total of 601,550 Bitcoin, acquired at an average price of roughly $71,268 per coin, bringing the total value of their holdings to around $42.87 billion. These figures show a significant accumulation and a strong return on their Bitcoin investments this year. Saylor stated that the Office of the Comptroller of the Currency, OCC, the Federal Reserve, and the Federal Deposit Insurance Corporation, FDIC, have reaffirmed that banks are permitted to offer custody and safekeeping services for crypto assets, such as Bitcoin. This is allowed under existing risk management expectations, meaning banks can manage and store digital assets as long as they follow established guidelines. He pointed out that this regulatory clarity is important for the industry, as it gives banks a green light to provide secure storage solutions for digital assets within the traditional financial system. He explained that this move by the OCC, Fed, and FDIC could encourage more institutional investors to get involved in the crypto space. With banks now able to offer custody services for Bitcoin and other crypto assets, investors may feel more confident about the safety and legitimacy of holding digital assets. Michael Saylor's updates acknowledge how both large-scale Bitcoin accumulation and evolving regulations are shaping the current environment for crypto investments and institutional adoption. Also, Bitcoin Magazine shared some bold predictions about the future of Bitcoin, highlighting strong optimism in the crypto market. They reported that the CEO of Nakamoto, David Bailey, confidently stated that Bitcoin is headed to $1 million per coin and that nothing can stop this rise. This kind of bullish sentiment reflects growing excitement around Bitcoin's long-term potential. The magazine also cited a recent analysis from Bernstein, a firm managing $829 billion, which expects a long and exhausting crypto bull market. According to Bernstein's forecast, Bitcoin could reach $200,000 during this cycle. They based this prediction on the MVRV multiple, a metric comparing market value to realized value, which, if it matches the previous cycle's peak, would put Bitcoin's price close to $196,000. Bitcoin Magazine noted that this data is continuously updating and rising, suggesting that the $200,000 target might be surpassed in the coming weeks. These sentiments support a larger notion that Bitcoin's current bull market has plenty of potential to rise. The fact that Bitcoin might achieve such high values demonstrates the faith that some experts and industry executives have in its future. The suggestion of a long and exhausting bull market implies that, while rewards may be large, the ride will be volatile and difficult for investors. Bitcoin Magazine's tweets express both excitement and cautious optimism about Bitcoin's price trend. By presenting both the CEO's bold claim and Bernstein's extensive study, they provide light on why many people regard Bitcoin as a powerful asset with the potential for rapid rise in the near future. We wrap this up with a question. What do you think is driving so many investors to choose Bitcoin over traditional assets right now? Please drop your thoughts in the comments below, share this video, and hit your thumbs on the like button. Thanks for watching. Don't forget to subscribe.